I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Maximizing Tax Saving Strategies for Small and Medium-Sized Businesses. Thank you for joining. My name is Katrina Craft. Please make sure that you do consult your accountant. Every situation is different, and what I'm talking about today may not apply to you. Now, let's talk about entity compliance. Once you set up your LLC or your S Corp, C Corp partnership, there's some compliance that goes along with that. There's a required annual board meeting. So you need to have a board meeting. You need to have your notes and your minutes from your board meeting every year. That is required. Also, there's a new beneficial ownership information report that is now due. If you own an entity, if you set up an entity in 2024, you have to report immediately. If you had an entity before 2024, you're going to be required to complete this beneficial ownership information report by the end of the year. If you do not, it's a $500 per day penalty. The IRS or the FinCEN, they're really trying to find out about criminal activity. So they want you, if you have any entities, they want you to say who is the beneficial owner of this entity. Very important, something very new that just came down last year, and they're giving you a year to get compliant. If you already have a business, if you're starting a business this year, know that this is going to be a requirement of $500 per day. If you go to my website, CatrinaMCraft.com/resources. If you go to CorpNet, there is a place. If you go into CorpNet under my resources, there is a place that you can learn more about the corporate annual minutes requirements, and they can do that for you. Also, beneficial ownership information, they can do that for you. We mentioned in the last slide, you got to have an annual board meeting. Well, that annual board meeting can be anywhere. This is one way that you can have a travel deduction by having a board meeting. So if you say, oh, this year I want to have a board meeting in Florida, you can have your board meeting in Florida. You can have your spouse or friend that's a part of your board. That means that you're paying for that person who's ever on your board, if you desire to. You're paying for their hotel, you're paying for the air, 50% of the meals, the ground transportation, and more, like tips that we talked about. This is very important because as you're doing your meetings and your board meetings and your compliance, you need to make sure that during that board meeting, when you have a business trip, they want you to spend 4 hours, at least 4 hours on business activities. So you could have a board meeting and then you could go to lunch and have a business meeting. So as long as you're doing 4 hours, now you could have 2 board meetings during that time, and both would be a deduction for the 2 days that you're there. One item of like a tax strategy that you could do is have a board meeting on a Friday and then say we're going to have it on a Monday. Well, we know that most businesses, they say business days are Monday through Friday, So that means that Saturday and Sunday, you could have free time. It would still be deductible. That hotel for the whole time that you're there, the airfare round trip would still be deductible as long as you had your meeting on a Monday as well. The meals would only be deductible on the days that you're conducting businesses, so that Saturday and Sunday would not. But that will allow you a huge deduction because now you have 4 days of at least hotel and airfare and ground transportation. That I would look at too. If you're doing ground transportation and you're not doing business, I would not deduct that because that's not business related. But the ground transportation while you're the days that you're doing business would be deducted. We talked about 2021 and 2022. It allowed the 100% restaurant meals. So if you have not filed your tax return, remember that's done. And then you can look at if you want to do per diems, or if I receive a per diem, is it taxable? That's if you're an employee. But there are governmental per diem highlights and rates. You can go to this website below. And if you want to research just per diems, if you want to pay your employees a per diem, you can look at the government rates and how they do per diems. That way you would know that if you're audited, it would pass the test because you're following the exact same governmental per diem rates. And they have rates based on location. They also have just the general one rate for anywhere a person would travel. They have different rates. So go to that website and look. So travel deductions, renting from family. This is another tax strategy that you could utilize in your business. Let's say that you are traveling and you want to stay with your mom and dad. That could be tax-free income for your mother and your father, okay? It doesn't have to be mom and dad. It can be anywhere, your brother, sister, your best friend. But how this works, you have a business reason to travel and stay overnight. So I live in Texas, but I may have family that lives in Florida, and I have a rental property in Florida. So I have a business purpose to go to Florida, or I have a meeting that's in Florida, I'm going there, or a conference that's in Florida and I'm going there. So it can be anywhere, not just Florida, but anywhere. And you stay overnight at your mom and dad hotel. So we're going to say it's called the mom and dad hotel. But again, it could be your brother and sister, your best friend. You travel to that convention, your business meeting, and your parents rent the guest room for 5 days to you. You pay them $1,000. It has to be the fair market value rent. So what you would do is look at how much would this cost if I was doing an Airbnb or, renting in a similar type of space, a room. You deduct $1,000 as a business travel expense because that's your travel for your lodging, and your parents have $1,000 of tax-free income. Does that sound good? If you're helping your family and your parents or your brother and sister, this is a way that you can take the deduction, but you're renting from your parents. But there are 3 rules that you have to follow, or whoever you're assisting. This is a way to deduct that instead of just giving the money. So when you're renting for family, you need to make sure that you rent for fewer than 15 days. That is the only way that your family can rent to you and not have to recognize the income. It has to be rented for fewer than 15 days to qualify. Then the property as a home, they can't use it for more than 14 days, like renting to other people. So not only you, but as a whole, they cannot rent it to other people. Okay. So if your sister or brother also have a business and they want 15 days or 14 days and you already have 14 days, that's not possible. Okay. So as a whole in the year, they can't, whoever's renting can't do more than 14 days. And you must charge their fair market rent. So make sure your family and friends document where rent is paid as fair market. Look around to see what a room would rent for in that area. And these are the rules that you need to follow. But that's a way to rent from mom and dad hotel when you're traveling. Now let's talk about fixed assets and purchases, you can deduct qualified property and get an immediate larger deduction instead of having to depreciate it. So that means if you have certain equipment and furniture and fixtures, you usually have to depreciate it. And depreciate it means you're deducting the expense based on when you're using it and the useful life and things like that. But the bonus depreciation allows you to avoid having to depreciate it over the useful life. And now you can get the deduction immediately. In 2022, it was 100%. So you've missed that if you've already filed and you didn't know about this. You could deduct 100%. Or if it's a large enough deduction, you may want to go back and amend your tax return. So those are things that we consider as well when we get new clients. We look at their last 3 years tax returns and see if there's anything that's missed so we can do an amended return. You can go back 3 years. In 2023, so as you get ready to prepare your tax return this year, it's an 80% deduction. 2024 tax year is 60%. And as you can see, it goes down until zero. So sometimes the IRS will renew this bonus depreciation because it has been around for a minute, for several years, and IRS may renew this deduction to make it 100% again. Just depends on the economy and what they're wanting to do. So make sure that you're taking this deduction. It's really good because you may have heard of the Section 179 deduction. The 179 allows you to deduct 100% immediately up to a certain amount. The issue with the 179 is you can't have a loss and take a 179 deduction. So if you have a profit and what you need to deduct is within the amount of your profit, then you may be better suited to take the Section 179 because it could be 100% depending on how much the value of what you need to depreciate. So that's why you need to, understand the code, know which tax strategy is best for you because different tax strategies could benefit you. There are big tax breaks for qualified improvements to property. If you are in a lease and you're renting, or you have a property that is non-residential, so we're not talking about a house that you're doing, you can deduct these improvements. So if you're going in and you're doing flooring, you're doing wash, you're doing, tear downs, flooring, those type of qualified improvements to property can be a deduction for you. Okay. And a single year instead of multiple years. It used to require on your tax return to do it over multiple years because, again, the depreciation. But now they have some special code in the tax code for qualified improvement property. Okay. QIP. So in 2021 and 2022, QIP was 100% under the bonus depreciation. So we need to look at the QIP for 2023 and 2024 and follow those rules on what is deductible. So what is QIP? It's ordinary, non-residential real property that's usually depreciated over 39 years. So non-residential property is depreciated over 39 years. So those type of improvements. But the Congress, they really wanted to encourage business owners to improve their property. So they started this in 2018 with the Tax Cut Jobs Act and established this new category called QIP. Okay. And it's a shorter recovery period as well. The 15 years, they made that 15 years. But with the bonus right now, the QIP could be more beneficial. But it's going to revert to a shorter time period. So big tax breaks for the qualified improvement to property. Let's think about office buildings. If you have a single office, restaurants, bars, if you have a store, if you're doing improvements in a strip mall, motels, hotels, warehouse, and factories, they all qualify because they're commercial, non-residential property. So if you have any of these buildings, you could be leasing those buildings, you could be owning these buildings. We need to look at this QIP deduction. where do we go from here? We're going to talk about customization of a tax plan. We have consultation where we look at, okay, what do we need to do? So there's a consultation call. Then we develop a tax plan for you. Then we help you implement that plan, because I can give you the plan, but if you don't know how to implement it along the years, then you will not recognize those tax deductions. So we do work with you on the customized tax plan and then working with you throughout the year to implement it. So the Craft Money Map Plan is a tax planning, and it really looks at maximizing the money you keep. You can make money, but if you're not keeping that money, then all of your assets and this wealth that we're trying to generate will be spent on the IRS. So we want to avoid that with maximizing the money you keep by tax planning. You need to know what deductions you can legally utilize to reduce your tax burden. So really deciding what's the best business entity structure and how to protect your assets. Then we're going to equip you with a plan. So we give you the plan. We help educate you on how to reduce your tax liabilities and protect your asset and wealth. So again, you could work with the asset attorneys that we work with. You could work with the trust attorneys that we work with, and they understand the strategy. So along with knowing tax strategies and minimizing tax and doing strategies to help you with where you're going and your goals and your business and your real estate and your personal life, you have to protect those assets to make sure that generational wealth can be passed, and you're protecting yourself from people who may want to sue you, creditors. So those are some of the things that we want to look into. So there's a 5-step roadmap process, and you discover and evaluate where you want to go, and how do you get there. So we talk about that. We strategize which direction you go. Then we execute the plan. That's the implementation. We review, did you get to your destination? Like, what were your goals? And then if not, things change in your life. You may think you want to start one business or buy 10 rental properties, and then you decide, oh, I want to do flips. So we have to recalibrate and change that plan sometimes depending on where you're going. So it's not a static roadmap, not a static strategy. We're always looking at what we can do as you grow and as your goals and your dreams change. So my website is CatrinaMCraft.com. You can go there. I mentioned several sections. The resources section. At the resources section, you have places where you can hire employees through payroll. So we have payroll links. We have links for the CorpNet, which we talked about, the compliance, how that annual compliance is necessary. Also the FinCEN requirements that we talked about. You can get more information there by going to that link. And then we have just other resources that are helpful for business owners. Please go to my website. There's also a space where you can register to get on our wealth and tax tips. We send wealth and tax tips out. And if you're interested in getting those, we do send those out. And that's where I will announce different webinars. I will also announce how to join the coaching for small businesses and the wealth intelligence course